Bitcoin's price action against US Tether USDT demonstrates a period of delicate equilibrium following a powerful upward extension, which warrants close observation from all market participants. The daily chart currently paints a picture of consolidation, where price is persistently moving within a relatively narrow band, suggesting a battle between buyers securing profits and new investors accumulating positions before the next directional impulse. We must consider the strong resistance level situated near the $91,500 mark-in area, where previous rallies have been decisively rejected, signaling a significant supply zone which needs a high-volume breakout for the bullish thesis to continue unimpeded. Conversely, the immediate support region around $88,000 provides a robust floor, where aggressive buying has consistently stepped in to absorb selling pressure, thus defining the lower boundary of the present consolidation structure. The moving average convergence divergence MACD indicator on the 4-hour time frame is showing a slight bearish divergence, where the price has made higher highs, but the momentum indicator is failing to confirm this strength, which is a subtle warning sign of potential short-term weakness or an impending retracement to test lower support levels before any renewed attempt at breaking resistance. Furthermore, examining the volume profile reveals a notable decrease in trading activity during this consolidation period, which is typical, but a sudden spike in volume accompanying a break either above $91,500 or below $88,000 would be a key confirmation signal for the direction of the next major price swing. The stability of USDT as the primary stablecoin pair for BTC remains critically important, reflecting sustained confidence in the crypto ecosystem despite regulatory uncertainties globally. Any significant deviation of USDT from its $1 peg would introduce market-wide panic and instability. Yet, its consistent parity reinforces the current environment of market liquidity and tradability. Investors are therefore encouraged to maintain vigilance, particularly around the critical psychological level of $90,000, which is acting as a magnetic pivot point influencing short-term market sentiment. A sustainable close above this level on the daily chart, coupled with increasing bullish momentum, would open the path for a retest of all-time high territories, while a breakdown below the aforementioned $88,000 support could initiate a deeper correction towards the next significant support zone near $86,000, where the longer-term moving averages reside, providing potential confluence for a bounce. This phase is best characterized as a high-stakes waiting game, where patience and strict adherence to risk management principles will be paramount to successfully navigating the impending volatility that will inevitably follow this period of compressed price action. The overall market structure remains bullish on the macro scale, but the short-term dynamics necessitate a cautious and measured approach to trading and investment decisions until a clear breakout confirms the market's intended trajectory. The correlation between BTC and traditional risk assets is currently minimal, suggesting that Bitcoin is acting on its own distinct market drivers, primarily driven by institutional adoption narratives and the post-halving supply shock dynamics. That analysis concludes that while the long-term outlook for Bitcoin remains extremely favorable, the immediate future is dictated by the resolution of this current range of breakout, of which promises a high-velocity move. Bitcoin's technical landscape is currently defined by a critical decision point, where the asset is hovering directly beneath a formidable multi-month resistance trendline, demanding absolute attention from all traders and investors seeking clarity on the market's immediate future trajectory. This specific analysis will pivot away from basic support and resistance levels to deeply explore the Implications of the Relative Strength Index (RSI) and the Bollinger Bands, which together offer a comprehensive perspective on the current momentum and volatility profile of the asset. The daily RSI is currently situated just below the 70 mark, indicating that Bitcoin is not yet in the extreme overbought territory, but is certainly demonstrating very strong bullish momentum that has been building consistently over the past few weeks without a significant or meaningful retracement. However, this positioning near the overbought threshold suggests that the market may be susceptible to a swift correction or a sharp cool-down period should buying pressure suddenly dissipate, making any new long entries inherently riskier at this elevated momentum level without confirmation of a breakout. Concurrently, the Bollinger Bands on the daily chart are beginning to expand significantly, which is a classic technical signal indicating an imminent sharp increase in volatility that is likely to resolve the current period of price consolidation and directional indecision that we have been observing. The price is currently tracing the upper Bollinger Band, which confirms the dominant upward bias of the market and suggests that the momentum is concentrated on the upside, but any decisive close outside the upper band could be interpreted as a potential blow-off top or an unsustainable extended move that would quickly snap back into the band's confines. The crucial pivot here is the relationship between the price and the 20-period simple moving average SMA, which serves as the middle band of the Bollinger structure and acts as a dynamic support level that must hold firm to maintain the structural integrity of the current uptrend. A decisive price breakdown and daily close below this middle band, around the $8,000 to $9,500 level, would be a major bearish trigger signaling a potential trend reversal or at least a deeper corrective phase that could easily target the lower Bollinger Band around the $87,000 mark. Regarding USDT, its circulating supply and market capitalization data offer an important context for understanding market liquidity and overall risk appetite. An observed increase in the total supply of USDT often correlates with potential buying pressure on Bitcoin, as newly minted stablecoins are typically deployed into the market to purchase crypto assets, suggesting a persistent demand from large market participants or institutional entities who are preparing to enter positions. Conversely, a consistent decrease in the USDT market cap would signal widespread de-risking as funds are converted back into fiat or alternative stable assets, reducing the immediate pool of capital available to fuel Bitcoin's ascent. The current data shows a steady and robust growth in USD supply, which strongly reinforces the underlying narrative of continuous capital inflow into the cryptocurrency space, providing the necessary liquidity foundation to support Bitcoin at its elevated valuations despite the minor consolidation. Therefore, the convergence of an expanding volatility regime signaled by the Bollinger Bands and the high, but not overstretched momentum profile from the RSI suggests that a massive directional move is imminent, and traders should prepare for a high-impact event that will likely be catalyzed by a break of key structural resistance or a failure to maintain the dynamic support provided by the 20-day moving average. The analysis concludes that while the macro liquidity picture provided by USDT remains supportive, the short-term technical indicators warn of a highly volatile period ahead, necessitating strict risk management and confirmation of any breakout move with significant trading volume before committing substantial capital